The Tax Relief Unemployment Insurance Reauthorization and Job Creation Act was signed into law on December 17, 2010. The end result of the President's compromise with Republican congressional leadership, the new law extends the Bush tax cuts, set to expire on January 1, 2011, includes a retroactive 2-year patch for the alternative minimum tax, makes temporary changes to the estate tax, introduces some new provisions for individuals and businesses, and extends benefits for the long-term unemployed. Here's what you need to know. Federal income tax rates were set to increase from their 2010 levels on January 1, 2011. But the new law extends existing rates for 2 additional years through 2012. Existing tax rates for long-term capital gains were also extended through 2012, and these rates will continue to apply to qualifying dividends as well. The alternative minimum tax, or AMT, is essentially a parallel federal income tax system with its own rates and rules. A series of temporary legislative patches over the last several years have prevented a dramatic increase in the number of individuals subject to the AMT. The last such patch, however, expired at the end of 2009. The new law maintains the status quo by retroactively increasing AMT exemption amounts for 2010 and extending the increases to 2011. Non-refundable personal income tax credits will also be allowed to continue to offset AMT liability in 2010 and 2011. The new law also makes major changes to the federal estate tax. For 2011 and 2012, estates under $5 million generally won't owe federal estate tax, and the top estate tax rate for these years will be 35%. The $5 million amount and the 35% top estate tax rate apply retroactively to 2010 as well. But for individuals who died in 2010, an election can be made to choose the estate tax provisions effective prior to this legislation, electing no estate tax but applying special rules relating to the tax basis of inherited property. Also, for 2011 and 2012, when one spouse dies, any unused portion of that spouse's estate tax exemption amount may be transferred to the surviving spouse. Related changes are made to the gift tax and generation-skipping transfer tax as well. The new law includes a 1-year 2% reduction in Social Security payroll taxes for employees and self-employed individuals, and businesses will benefit from a new 100% additional depreciation deduction for property acquired and placed in service after September 8, 2010 and before January 1, 2012. Bonus depreciation at the 50% level will continue to be available for property acquired and placed in service during 2012. The new law also extends a host of provisions that had either already expired or were about to expire, or would have reverted to old, less favorable rules beginning in 2011. This late-breaking legislation contains provisions that will be welcomed by many, but there's a lot to digest, so understand your options, ask questions, and start planning now.